What's up everybody, welcome to Money Management channel. My name is Andrei and today I'm going to be doing an update on SOFI ticker.
I got the cash in the bag, stadium packed, born a rock star in this life, gonna live it up on.
And on today's video, first of all, I will show you where we are on the price chart and how we get there. Then we'll continue with the fundamental news and I will show you why we have this massive movement to the downside. And at the end of this video, I will share my thoughts and my technical analysis. And I will show you where we should expect a U-turn. And before we get into all of that, if you guys would like to earn 2 free stocks with Moomoo valued up to $7,000, please check out that link in the description below. All you have to do is sign up for an account and deposit as little as $1. This is guaranteed free money. Full details you can see on the screen right now. So let's start with the price chart. I made my previous video right here when we had this V-shaped correction, and I've told you that if you want to invest in this asset, first of all you have to do your own due diligence and you can accumulate your position by laddering your buys down. But on the other hand, I also told you that you might accumulate your position even as a swing trader, but your stop loss should be slightly below this bottom. And technically we hit this stop loss and your potential losses might be up to about 2.5 to 3.5%. It is not the highest losses, but these losses might prevent you from potential bigger losses in the future. So, and what should we expect next from the technical standpoint, I will show you in just several minutes. And for now, let me show you why we have this movement to the downside. First of all, let me show you that all of the indexes are in red, and I have to say they are deeply in red. S&P 500 lost about 1.69%, Dow Jones lost about 1.19%, Nasdaq lost about 2.18%, and the Russell 2000 lost about 0.71%. Huge losses across the market, and you might wonder why it is happening. And let me show you this. On April 11th, we have this article that is titled "White House says it expects inflation to be extraordinarily elevated in new report." And let me quote you key points. The Biden administration is bracing for the Labor Department's Consumer Price Index report to show that inflation is extraordinarily elevated. The Consumer Price Index, or CPI, is one of Wall Street's favorite ways to measure inflation. The CPI reading for March 2022 is due out Tuesday morning. And let me show you that it is scheduled to be released on April 12, 2022 at 8:30 a.m. So, by the time you will watch this video, this data is already released, and I have to say that I cannot make this video after this release because I live on the other side of the earth. That's why it is what it is, and we have to rely only on a medium and a long-term perspective with this asset right now. So, and let me show you more information. We expect March CPI headline inflation to be extraordinarily elevated due to Putin's price hike, said White House Press Secretary Jen Psaki. The February reading showed the benchmark index rose 7.9% over the last 12 months, the highest level since 1982. And definitely, this anticipation of high CPI data is really scaring the market, and that is why we have this massive sell-off all across the markets, and that is why SOFI also lost about 2% of its value. So, and let me show you this information. We have another price target that was set by Citigroup, and they lower its price target from $20 to $17, but still from the current ranges of about $7.7, it is more than 100% of potential profits. Definitely huge upside potential, and in my opinion we might hit these ranges. As you can see, the latest updates was made on April the 7th, April the 5th and April the 8th. And the lowest price target is $12, made by Bank of America, and the highest price target is $17, made by Citigroup. And I have to say that you can rely on these price targets because these companies already lowered the price targets. That is why they are up to date. And let me show you this article. We are on Investor Place, and in my opinion this article is really important in order to understand how to define good news and bad news. So, this article is titled "SOFI Technologies will continue to suffer, and not just from post-student loans." And let me quote you this. SOFI Technologies did report record revenue for the fourth quarter and 2021. But why should the markets reward it? A growth stock in an environment in which the Federal Reserve will continue to punish such equities. SOFI Technologies' net losses more than doubled in 2021, reaching at $483.9 million. That number should stay down because the company doesn't expect student loans to resume this year, and the Fed is going to crank up interest rates through 2022. And I completely disagree with these statements because when the interest rates are going up, definitely it is negatively affected the growth stocks company. But on the other hand, SOFI for now is a digital bank and they received their bank charter, and all of the banks are benefiting from the increase in interest rates because they increase their profitability by increasing their own percentage of loans. That is why I disagree with this statement for the first time, and for the second time I disagree because this article doesn't show any improvements in their fundamentals, and the improvements are following. They just received their bank charter license. They made an acquisition that will allow SOFI to drastically increase their presence in Latin America, and their student loan share is not more than 15% of entire stake of their revenues. And let me show you another data right here. You can find that SOFI Technologies' expectations are that the extension will result in approximately $80 million less of net revenue in 2022. It also predicts it will see a $100 million hit to its expected EBITDA. And I have to say that these two numbers should be placed vice versa, because let me show you their official press release. SOFI's updated adjusted net revenue and adjusted EBITDA guidance for full year 2022 is $1.47 billion and $100 million respectively, a reduction from previous guidance of $1.57 billion and $180 million respectively. So that is why you have to do your own due diligence in order to prove or disprove the theories that you can read in these type of articles. And let me quote you at the end of my fundamental analysis, Anthony Notta. And he said, even with the assumption of no end to the moratorium in 2022, our new full year 2022 financial guidance represents approximately 45% year-over-year adjusted net revenue growth to $1.47 billion, a tripling of adjusted EBITDA to $100 million, and a doubling margins. SOFI has done an outstanding job achieving record financial results, member and product growth, and consistent profitability, despite the negative impact of the extended student loan payments moratorium. We will work diligently to continue that trend in 2022. Definitely, for now, the main negative catalyst is the catalyst for the broader market, and it is the CPI data. That's why we have to be cautious, and that's why, in my opinion, we don't have any setups for the swing traders, but we have very good ranges of investing in this company. So, and let's continue with the technical analysis, but before we dive deep right here, please subscribe to my channel, hit notification bell and hit the like button. This helps me a lot. So guys, why we don't have any setups for the swing traders? Because we have very tiny swing low right here. Basically, it is all-time low of roughly $7.58, and from this range, if the CPI will be much higher than anticipated, definitely it will impact the market in a negative manner, and definitely we will see lower price action. And in this case, you will be able to add to your investment position. But otherwise, if we will have a good data, definitely we might see some kind of bounce to the upside. And when we will have the retracement, on this retracement, you will be able to re-enter your swing trade position, because we will establish higher lows and higher highs on a smaller scale. And for now, we don't have this higher highs and higher lows, because we don't have any volume right here that might support this movement to the upside. Right here we had this volume, because as you can see, we had a very good movement to the upside with these green candles, and that is why right here we had this opportunity to re-enter the swing trade long position, but unfortunately we hit our stop loss. So I think from the technical standpoint that's it for now. If you like my video, please hit the like button and subscribe to my channel with notification bell, and see you guys and girls next time. Bye!
I got the cash in the bag, stadium packed. Born a rock star in this life, gone live it up on the attack. Baby, I'm bad, I just wanna get caught up in this life. I'm crazy, I'm mad, doing no cap. Only God wants, so you better go live it up.